Valcor. Thanks for joining us. And we're going to be getting to our guest here in just a couple of moments, who will be talking about everything there is about what is happening right now in the economy. I don't know about you, but as a student of the economy, I'm always fascinated with the ebb and flow of what is happening. Oftentimes, the things that are taking place are outside of our control. We had one of the most incredible black swan events in our lifetime, most of us anyway, with what just took place with the pandemic. But the one thing that we're seeing is that there is no consistent trend in business right now. Some business owners are trying to find a sense of normalcy as they re-immerse back into a post-pandemic economy, while others are struggling just to keep the doors open. One of the hardest hit segments in the economy was commercial real estate. Now, as vaccines become ubiquitous and people are feeling more comfortable going out, businesses are still struggling with commercial rent and mortgage obligations, which points to a potential looming crisis. Now, these markets are micro. They're not ubiquitous all across the country. Every community has good and troubled areas. It's not monolithic. You can have the same business across the street from each other, and while one rebounds, the other is struggling. Now, the 4 areas of commercial real estate we are currently helping clients are in retail. We're seeing office space, we're seeing hospitality, and industrial. But what is happening in the larger economy is of tremendous concern. We're going to be talking about this today with Todd Lindsey, who's the COO over at A10 Capital. We'll talk all about that and what is going on in lending. But the printing of the money, the spigot that is coming out of the Federal Reserve, they're not actually printing money. Everything is electronic today. That will most likely help the economy. It will stimulate the economy for about 10 minutes. The sugar high of low interest rates, along with the cash flooding the economy, will be short-lived. We're already seeing some of the early repercussions as energy and food and commodity prices are skyrocketing, along with asset prices. The housing market right now is just insane, with many cities seeing 30 offers over asking for each individual property listed. The stock market looks like a hockey stick, and commodities like lumber are causing an already low supply of new homes to crater. Historically, there is really no precedent where this type of government intervention has ended well. Today, we're going to be talking about what is happening across the economy, from inflation, commodity prices going through the roof, the speculative nature of both the equities and cryptos and everything else that we're seeing that's incredible right now. We're going to be talking about commercial real estate. We're going to be talking about what is happening in different sectors around the country, what we are seeing right now regarding what is happening with the banks, foreclosures, forbearances, and the like, what that's going to be looking like over the next 6 to 12 months. What are the policy and tax regulation changes that are coming down the pike? How is that going to be impacting our small businesses? And also PPP, forgivable loans. What is that looking like right now? Is that something that you may be able to access and apply for? And so we're going to be talking about all of this and a lot more. And to join me to talk about everything that is going on in the economy right now, I'm delighted to have Todd Lindsey. He is the co-founder and CEO of A10 Capital. It is an SBA-approved PPP lender, which serves the middle market. Loans typically from $3 to $30 million. And A10 has funded over 60 million square feet of commercial properties and is backed by significant institutions such as Gemspring Capital, Schroders, BlackRock, KKR, and HIG. Welcome, Todd. How are you today?
I'm great. Thanks for having me. Look forward to the conversation.
Likewise. So I want to get into a whole array of different issues with you. At Valcor, we're small business advocates, and we work with small businesses throughout North America that are suffering short cash flow problems. We do a lot of workouts, restructuring, and capital acquisition. The economy, obviously, with the pandemic, now more or less in our rearview mirrors, we're starting to come out of it right now. The economy is playing a major role for the small to medium-sized businesses, SMBs as we call them. Just from a macro perspective, kind of give me your lay of the land right now, what you're seeing.
I think it's regional. I'm sure you've heard that from lots of people. Here I'm in Boise, Idaho, our economy's been relatively open, so we have very low unemployment. The economy is starting to really get going in spots. We own a number of different businesses like you across the spectrum. So we're in the restaurant business, manufacturing business here, real estate business, as well as the finance business that we're talking about today. So all those things are coming out at different speeds. There's definitely supply chain issues across almost every business line, especially the manufacturing stuff. That is looking to me to be very problematic going forward for the next 3 to 6 months. There's shortages of critical things that we all need to do what we do, and if you can't get a hold of one thing you really need, you have to stop. And we're facing that issue in a couple of spots right now, and we're trying to figure out workarounds. And we're not a just-in-time inventory type manufacturer in our businesses. We're more of a stock it up and hold it, because we're small enough where we can do that. And it's still problematic. We try to keep on hand a 12-month supply of materials, and that's starting to get the low-level warning light is on some of the supply chain stuff. People are out, I think, starting to get active. On the restaurant side, we're seeing the restaurant sales numbers, really start to return to normal on most of our restaurants. Some not so much. It's kind of location driven here. But I think everybody's trying to get back to normal as quickly as they can. But I think it's going to be a little more difficult than some of us were hoping.
You're talking from a national perspective, and it's very, very hard. I mean, there's 50 states and there's different regions within each of those states. So you have microeconomies that are doing better than others. You're in Boise, Idaho. Idaho's gone through the roof. You've got a tremendous amount of inflow from people moving from the West Coast to where you are, which is, I know it's impacting your housing prices there as well. But
Yeah.
What are you seeing through your nationwide firm as far as different regions of the country that may be more troubled or better off?
Well, I don't think I could say it any better than you implied in the question. We have retail centers all over the country that we have debt on, and they're starting to try to get some traction and get going. But it is regional, and you go to California, for instance. I mean, that place is locked down still.
Yeah.
So and if people are out and about, it's still very restrictive. So habits are not returning to normal as quickly as they would in Boise. The Northeast is, very similar. I mean, you think about New York City. I haven't been there in quite a while, but with our finance businesses, obviously we spent a tremendous amount of time in New York. I'm hearing it's nothing like it used to be, the vibrant city where you could go and get anything done any time of the day or night. And for finance people, it was ground zero in the world. You could get together with anybody you needed to figure out how to do something. And I think, we got to get back together for that. I think we've lost some of the creativity, by doing all these Zoom calls. I think there's certainly been benefits to connecting like this with folks. But I'm not sure that we can just do it exclusively. I think getting together with a group of people and having a conversation develop is super important for the creative process and for businesses to be able to thrive. But real estate, while also in the office sector, we're concerned about our people going, how are we going to do this? I mean, even in Idaho, people are reluctant to come back to work on a regular basis. And even if they're not fearful of contracting the virus and they've been vaccinated, they've told us that they would prefer to work from home at least a significant portion of the time because they've gotten used to it. And we're not so sure that that's good either. Maybe a little bit can be worked into this, to what we do, but we're going to have to work all this out as a society, and it isn't going to happen overnight.
So you guys are in commercial real estate, and we're seeing hospitality, hotels, especially, small to mid-market hotels, independents, non-flagships, being severely impacted. We're seeing retail sector, especially strip malls, office parks, high rises. When you've got companies like HSBC, one of the largest banks in the world, saying that they are, in fact, changing everything around, they're going to expect that, probably over half of their people that they used to have coming into work are no longer going to need to come in. What does that do to specific regions around the country where commercial real estate plays such a role?
Well, I guess we have to be good guessers, right? That's our job. We better be good guessers, or we're going to get caught holding the bag. We see people a little bit of a move. Suburban office used to, before the pandemic, was like the contaminated waste of commercial real estate. Now, not so much. People are the CBDs and the big gateway cities was gold plated. You're never going to get hurt there. That stuff has declined in value dramatically. People, commuting into these big gateway cities is not going to happen with the frequency we believe ever again. We're going to have growth eventually, but some of these people are going to be working from home, so that's going to affect what people do with office space and flex space and all of that kind of stuff. The hotel business, of course, is going to be negatively impacted by business travel to the extent we replace even a small percentage. A 20% replacement of business travel with Zoom calls is very impactful for the hospitality industry, the restaurant industry, the travel industry. We were designed to run near capacity in many of those businesses. You don't run a restaurant at, you don't just throttle it back to 70% and cruise along, pull out half your chairs. It doesn't work that way. And I don't think it works that way in hotels very well, and it doesn't work that way on airliners very well. So, if you fly around the country a little bit, which we still get around quite a bit, you'll still see, at these smaller airports, 15, 20 major airline jets parked there out of service. So how long it takes to get back to full throttle could be years in some of those industries.
Now you guys are direct lenders, right? I mean, you got some great backing partners.
Yeah.
Correct.
So you guys have great partners.
Yeah. You guys are underwriting, you're doing your own loans. There's been some discussion regarding some rise in commercial real estate defaults. Adam has reported on this. We're starting to see different sectors impacted more than others, different regions, as you just correctly stated, impacted more than others. Are you guys impacted by that at all? Are you seeing an uptick in late pays, non-performing debt portfolios?
Yeah, well, no, for us,
Okay.
which I'm happy to report. We were very concerned March, April, May last year, of course, as everybody in the real estate business was. We had no idea where this thing was going. We also, in our bridge lending, that's the bleeding edge. That's development stuff. That's people converting properties. It's scary. You got to know what you're doing there. You're going to get hurt. We've been very fortunate to navigate through that. We are a very conservative shop generally. We're not in the business of loaning to own, so to speak. We want to be a partner with our borrowers. We don't want to take properties back, so we try to enter the transactions in the spirit of cooperation and in a way where they can weather these kinds of storms. So we've been lucky, but that's us. And the way we structure our transactions here, we really need to do a good job on the credit side of our business. We don't lay off the risk in some way where we can do stuff, get it packaged up and blow out the risk and move on to the next deal. That's not how it works here. So, that risk retention, as they call it generally, is an important component of safe lending. And we maintain an awful lot of that here with our own equity capital and other things. So, but like I said earlier, I think we've got to pay very close attention to property types. We've got to pay very close attention to regions. We've got to look at this out-migration in certain states. Like you mentioned, Idaho's unbelievable recipient of tremendous growth in population, primarily coming from California, but also from Oregon and Washington.
Yes.
So from Portland and Seattle and the major cities in California, it's unbelievable.
I've got a good friend. He just moved to Coeur d'Alene, which I've had the fortunate experience of been to. I remember, I think it was the only place I've played golf actually on a floating island on the lake.
Yeah, the Island Green. Yep. Yeah, it's cool.
Yeah, and that's Western Idaho, but obviously you're in Boise, and that's just grown like topseed. So talk to me a little bit about from your perspective, because we're seeing that this feverish speculative nature happening right now. We've been seeing it in real estate, commercial real estate, but especially residential real estate. And I know you guys don't do residential, you're doing commercial, and residential real estate and commercial real estate are very much apples and oranges. But we're seeing residential, and I'm sure you're seeing this in Boise to a certain extent, they're going for 30, 40, $50,000 over asking. You're getting 10, 20, 30 offers over asking on single family homes now. First of all, your thoughts on that, and does that bleed into, in some way, commercial real estate?
Well, yeah, I mean, in our commercial real estate, we have, the lending operation we do here. We also own a fair bit of it here locally, including apartments, which is, I'm bleeding towards residential when you own apartments. Mm-hmm. So there's definitely a correlation between price of housing, the rental market, rental rates, all that. It's all inflating. And I don't want to get and I don't mean this to be political, it's just I think is a fact that you've got a pretty big group of people with an awful lot of equity and capital right now looking for a home. They've gotten used to these very low rates and very low cap rates for your investments on real estate, and when I got in the lending business in 1982, there was a saying, the 10-year treasury was at 5%, real estate, you got 10%, and equity, you got 20. And that was the rule of thumb that ruled the roost for most of my career. Now everybody's gotten used to this 10-year treasury that roams around, $1.50. You got cap rates around 5 to 7%. And, equity's even gotten squeezed to where people will take pretty risky equity investments in the mid-teens. So, that's money chasing those deals. That's why that's happening. There's people with money and they've got to find a place to park it, and so they're rising prices. They're willing to make a bet that things are going to inflate and go up in value, and we definitely are seeing that here. It's unbelievable, just as you pointed out. I mean, it's 10, 15, 20% over asking price. People I've heard are pricing the houses to create the bidding war to actually maximize the price they sell stuff for. I have done a tremendous amount of residential lending in my career as well. You got the affordability things that come along with a rising market like that. Of course, we still have low interest rates, but we're setting ourselves up potentially if we start to get a little bit of inflation and interest rates start to move up. That starts to sound a lot like a period of time where I got in the lending business in the early 80s. And I'm telling you, that was not fun.
Yeah, well, we're looking at 70s level inflation right now, and the problem we have when we are dealing with this massive costs that are going through the roof, whether it's lumber and steel or other commodities, home pricing, whatever it may be, we're seeing the chip shortages that are slowing down manufacturing for cars. And as you correctly stated earlier, it's impacting our supply lines just coming out of a major pandemic. The question is, and I guess I'm going to ask you to put on your macroeconomist hat right now. When we see Jay Powell talking about the fact that they're not really seeing inflation, or it's going to be transitory, I think is the word. Yeah. And, short term. So they're not going to really start playing with increasing rates right now, because they know at the Fed that the second rates go up, even a smidgen, that the bubbles are going to burst in so many different sectors. Would you agree or disagree with that?
It'd be very problematic. It's problematic sort of on the level you're talking about when you start to look at, the debt structure moves together. So you've got companies able to borrow very, very low rates, floating rates, most of them.
Right.
So
it's free money right now.
Yeah. But that starts to run away, and, your cost of operations, interest becomes a much, much bigger problem for companies, bigger small businesses and, public companies. And of course, it becomes a big issue for the government too. They're financing their debt. So, it's one thing to be financing it at the low end of the curve when the curve is the way it is, and you're financing it, a 120 blended or less, probably 90 blended on the debt we're carrying as a country.
Yeah.
If that moves to, 5%, or as I mentioned in the early 80s, the prime interest rate was 21%. So it was an inverted yield curve, and that's not a good place to be.
So have they more or less kind of put themselves in the corner here, because inflation's it is going up, Forget the politicians and forget the spokesholes on television, okay, repeating what the politicians say.
Yeah.
We all know this. You only need to look at gas prices and food prices and the consumer pricing index, and everything is going up. Everything. So your dollar is being devalued, okay? We're seeing a lot of money now coming out of the equities market, the bond markets, and they're going into things like more speculative things like cryptos. Okay, yep. Which for many people have done very well with. Is that a flight to something that is disassociated with the dollar? And what does that say for the future when they're continuing to print like, it's not real printing, but they're just electronically making money out of nothing now? What does that do to the future for us as far as commodity prices and housing prices, commercial real estate prices?
Boy, you're going past my pay grade here for sure, because my partners and I have been looking at this situation for 20 years going, how is this sustainable? So
with $30 trillion national debt now.
Right. No, it's an incredible amount of debt. And that's the sort of hard number. But if you start going into the present value of the liabilities that the government's carrying, it's easily 120 trillion.
Yeah.
I mean, and if anyone denies that, they're smoking crack.
No, it's unfunded liabilities.
Right. And if you were a public company, you would have, or even a private company, you'd have to disclose that. It's very easy to do. You would just PV the liability and it would give you a number. Yeah. It's a big number for our country. So how we deal with those things, I guess the best thing I've heard from folks is that we're the tallest midget in the world, and the rest of the countries of the world have done the same damn thing. And so everybody is, living in this little fantasy land, and how that all comes to an end is concerning. And we're small businessmen. That's what we are. We're entrepreneurial people, and we sit back and look at these big giant companies and the government, jeopardizing our ability to operate in the playground here. We think it's a great environment to do things. And from an entrepreneurial perspective, if you took those big macro risks off the table, like for my children, I have 4 kids that are starting to enter the workforce now. And I look at it and go, wow, there's just so much stuff to do where you have your own business and be successful and whatever, if we have a stable economy. And obviously it ebbs and flows. We're not going to get rid of that. But when you're, addressing the risks that you're pointing out today, you sit there and wonder, like, what can a normal person do to plan around something like that, other than to, go back to work and do the best you can running your small business and doing what you do. I mean,
how does that impact cost of goods sold? And for many of our clients, across the country, we're seeing that, obviously you've got the big boys, you've got Amazons and Walmarts, and they're fine. They've done incredibly well in the past year. The stay-at-home orders have put them to the moon. But the small to medium-sized businesses that were already struggling, especially retail, that was already struggling against online upstarts before the pandemic, now are having to deal with increasing costs and putting themselves in a position where they either raise costs and lose competitive advantage. Now they're maybe at a competitive disadvantage because they're never going to be as low as Walmart or Amazon, or they're going to have to suck it up and basically lose any margins. Is this something from your standpoint? Again, we're going back to the raising and lowering of interest rates, inflation, and coming back to commercial real estate from the standpoint of it impacting stores and retail centers all across the country.
Yeah, the last time that we, as a country, we faced inflation like I think we're looking at here. And by the way, I completely agree with your point. I love these guys on TV that say, "Yeah, inflation's coming." I'm like, "What do you mean it's coming?" Yeah. Go to the store, you idiots. I mean, go take a look, buy a sheet of plywood or a 2x6 stud, and plywood's over 100 and the studs are over $10 a piece. I mean, people, I don't know that the people that are making the big decisions really relate to that kind of thinking, because they don't do it. Or food, to your point, cost of goods sold in a restaurant. Back in the early 80s, and I was a young person then, but I knew some guys that were pretty experienced, fortunately, to kind of help me along. And one of them was in the restaurant business, and he was telling me back in those days, I mean, they basically wrote their menus with an erasable marker. I mean, they were changing prices so fast that, to keep up with the cost of goods sold, that's all they could do. And you start getting into that double-digit inflation, which people are worried about coming now. I mean, you got to move price, and to your point, that's tricky. And Walmart and Amazon and all those guys, they got the very sophisticated ways of managing their supply chain, their costs. They're buying stuff forward. They're looking at all the things you're talking about. A guy like me, I'm in finance, so I have the advantage of, working through some of this stuff. But, if I was just in one of our business silos, or if I was running a restaurant, I don't have time to worry about all that crap. I just got to buy my stuff, figure out how to deliver it to my customers, and, focus on running my business. And throwing this element of risk, again, I hate to get to this consolidation of wealth thing that's been going on for the last, really 10 or 12 years in a pretty aggressive way for a number of reasons. But, the people that have money can afford to put in these very sophisticated structures, and they can have a competitive advantage. They have low cost of capital. They've got the ability to hire lawyers and accountants to help them through these complicated things. And like you mentioned with the PPP, is a perfect example. The guys who got to the PPP money first, they had the best lawyers, the best accountants, and the best banking relationships. They all got the money first. And that's just how it works. And they got in line first. They got their money first. They got their second loans first. They got everything first. And the situation we're in on the PPP is not going to make any of this better because.
Well, let's get into that, because that was actually my next item that I wanted to discuss with you. You guys you're facilitating PPP. There was the first round that went through. Most small business owners didn't get it. The larger boys did. The second round, it seems that they really are starting to focus on smaller to medium-sized businesses, and it wasn't just PPP. You're also seeing, I think it's $350 billion in aid now going to the states, and they're putting conditions on how that money is being used to the states. So what are you seeing right now as that transfer from the government through the states or through PPP? And are you seeing larger numbers of people receiving it? Is it impacting their businesses, helping them, or is it just keeping them barely above the surface?
So let's start specifically with the PPP stuff. A little bit of interesting history. In 20, you kind of look at it in production years. So in 2020, the first officially 2 rounds of PPP funding, as you mentioned, the bigger small businesses got it. And let me just back up and say the Treasury Department and the SBA were really, really focused on trying to get money to small businesses in totality.
And by the way, for our viewers, you were telling me that the Treasury contacted you for your input on the program, correct?
Yeah, me and lots of lenders. They talked to. They were very open to getting feedback from lots of guys that were participating in the market. That's how they were able to make the changes as we move forward with it. They were very open-minded, very hardworking, and knowledgeable guys at the Treasury. I mean, they were incredible, and the SBA too. I don't want to leave them out. I mean, those guys have taken a lot of heat, but I can tell you they were working pretty much 24 hours a day for 6 straight months last year. And then when they kicked this one off, they were doing the same thing again. I mean, they were dedicated to getting money to small businesses. But what's the definition of small business? Now, and I'm going to give you some round numbers. There's 32 million small businesses in the US roughly, right? 8 to 9 million of them have employees. 23 million of them don't have employees. So who got the money? Well, the people who have employees got 90% of the money. About 65 or 70% of the small businesses that have employees got a PPP loan. It's awesome. About 65% of those people that got their first PPP loan that had employees got a second one.
Right.
All good. The small business guys got less than 10% of the loans, the sole proprietors. They had 1/4 the amount of time to access the program, by the way. Practically speaking, they actually had the ability to get a loan from the very beginning, a sole proprietor. They were eligible for PPP loans. But the reason they didn't is in 2020, the way we were paid as lenders, we got a 5% fee. Well, for small loans, a 3% fee for the middle loans, and a 1% fee for the biggest loans. So if we did a $10 million loan, which we did, got a $100,000 fee, got about a $2,000 cost structure to do these things. So we made $98,000. The average loan was about 120, so you got a $6,000 fee, made $4,000. Do a $10,000 loan to a sole proprietor, and what did you get? A $1,500 loss. So what did we do? Well, as an industry, we didn't do those, and we're not going to do them. The only sole proprietors that got loans in 2020 were really, really strong ones that had great banking relationships, because the bank could make money on ancillary stuff. So they went to their really strong customers and they made these loans. It's just the practical reality of what we do in the finance business. We're not in the business to lose money. So we focused on those bigger loans. We did a whole bunch of them. We got a lot of money to those small businesses, which I think was important. They employ a tremendous number of people. So that was a huge success. But from the beginning, we were trying to get money to these sole proprietors, and we failed miserably until they changed the fee structure. Last summer, we had this all figured out. The Treasury understood this problem. They knew the solution was to put a flat fee in of $2,500 or half the loan amount, but basically $2,500, so that the lenders could make $500 doing a small loan. And we would do that, which of course we would do. But what happened when they opened up the 2021 production is they also made a pretty significant portion of that 2020 funding eligible for a second loan. We already had all the documentation. We had to go through the motion again, get an application, get the loans, the blocking and tackling of lending again with that customer. But it's the most profitable business I've ever seen. We've already done the loan. We've got the stuff. We just got to do it again. So the whole industry focused the first half of 2021 on making those second loans to the bigger small businesses. So 10 weeks ago, we kind of get that done and behind us. They made the Biden administration made two really important changes to the way we calculate the loan amount for sole proprietors that made it twice as good for them, literally twice as good. And, so the industry really started to kick into gear and getting to those sole proprietors. And we got to a couple million of them, but there's 23 million of them. There's 20 million left. A lot of people are saying there's 3 to 5 million of them just in the system. We're a relatively small lender. We did 25,000 PPP loans. I mean, we're not small, but we're not gigantic. So we did 25. We have 12,000 loans sitting here that we could do right now if they refunded this thing and gave us some more time to get to the sole proprietors. The other issue with sole proprietors is they were told by people in the industry, supposed experts, that, hey, if you don't have employees, you're not eligible. You have to have a banking relationship with somebody. You got to have great credit. These things really aren't forgivable. I mean, the list of excuses that, we fight to get those sole proprietors.
Tell me about that, because everything that I'm looking at right now is that the latest round, the second round, is forgivable, correct?
Oh, absolutely. Yeah. 99% of all of the PPP lending, they made the forgiveness process so much better.
Yeah.
From where it's like night and day. And I'm not exaggerating here. The forgiveness process has gone from a 40-hour process to a 5-minute process. For borrowers.
Yeah. And it's automated. You guys have automated it, right?
Yeah, exactly. And we automated it with help of the government. They're the ones that changed the regulations so that we could go ahead and figure out a way to do this safely and correctly.
So kudos to the government. This is over a period of almost a year now that they were putting this together. The first PPP program coming out a year ago, roughly, and then they've updated it. They saw some of their mistakes that they made and improved upon it. So I'm glad to see that, and I do know a lot more businesses got through the second round. Not huge money, but maybe enough of them to hire back some employees or get by, pay some of their contractors, whatever it may be. Are you expecting that there may be a third round?
Yeah, we are. I would say absolutely. If it was the bigger small businesses that had been left in the cold, it would definitely happen. These little guys really don't have very many trade associations, and they don't have a very loud voice. I mean, there's some big voices out there. The National Association of Realtors, for instance, they're a very powerful lobby, and they represent a ton of sole proprietors. And
FIB as well.
Yeah. So those guys need to push and there's some stuff moving right now The Republicans are reluctant. It reminds me of last summer when the Democrats were reluctant and sort of kept postponing the PPP from getting going last summer for
Everybody's a fiscal conservative when they're not in power.
Yeah, well, they messed around with the PPP, which irritated me because getting money to these small businesses is pretty important. We know, we're a small shop. I talk to lots of borrowers, so they're what they're using the money for is to pay off debts they've incurred to stay alive for the last year. I mean, that's 99% of what they're doing. I can tell you one thing: they're not out buying Ferraris.
And the SBA is also providing programs. I know you guys are providing SBA 7s, right?
No, we don't do 7s.
You're not doing 7s?
They may let us do a full
504.
They may let us do all of that by making our PPP license permanent, so that we can do other SBA lending. That it's something that's being strongly considered. There's a bill moving through there too, because again, they put this provision in for the PPP to let some entrepreneurial people get in here and solve some problems. And I can tell you that I think they're happy with the results. Our company, again, this is lots of other ones chipping in here, but there's some stuff that we've learned from fraud prevention from the PPP. When you do as many loans as we've done and seen what's going on, we've come up with some really, really good programs that can, in the future, if they implement them, which I think they're going to, will diminish fraud across the lending industry dramatically. And it's all because of this experience that they're going to push that through, and that'll save the industry, tens, if not hundreds of billions of dollars over time.
Okay. But you guys are approved by the SBA as a PPP lender.
As a PPP lender, yep.
Yeah. Okay. Gotcha. Okay. Yeah. Because I know there's primarily two different SBA loans that most people at least think of when they think of the SBA. That's the 7 and the 504. 504 more being real estate centered. And so what I'm reading and learning about and speaking to clients about is that some of the SBA loans over the past couple of months that have, are in the pipeline, they don't move quickly. There's 6 months of payment free. I mean, basically they're getting the first 6 to 9 months, whatever, 8 months, I forget the exact number, where they don't even have to make payments on their loan.
Yeah, they granted payment holidays along, as a form of, COVID stimulus across the board. So that was something that they implemented obviously on their own. The SBA does their own lending, they run their own lending programs. Part of, having the non-banks come into this is to, like I said, interject some new thinking and try to streamline some of this, because the SBA has, historically been kind of a lender of last resort. They actually have rules that you can't get a loan from somewhere else to go to the SBA. I mean, you kind of have to have exhausted conventional means of financing before you go there. So all that stuff's being looked at. And we'll
Todd,
see.
let me ask you this, because you've been in lending most of your professional life, and I've been a small business advocate most of mine, going on almost 30 years now. And, we've seen ebbs and flow. We've seen recessions. We've seen expansions and contractions. It's just normal cyclical nature of the economy. But what took place, and this is just kind of me putting on my economist hat right now, what took place in 2008, 2009, 2010 under Ben Bernanke, which was supposed to have been temporary, with low interest rates, with the Fed pumping money into, securities through quantitative easing, that was supposed to have been 6 to 12 months just to kind of get us out of that 2008 malaise. It is essentially now turned into 13 years long. And in my opinion, that is why we haven't had what should have been a recession during that time. Typical recession, 7 to 10 years. And yes, we can say we had a recession in the first quarter of the pandemic, but we bounced right back out of that. And that was not a natural contraction. That was obviously, they turned the light switch off for the global economy. Right. So let me ask you this. I kind of want to get your perspective, being in lending as long as you have. I've seen tens of thousands of lending institutions come and go over the decades, right? I think something like combined in 2008 to 2010, over 50,000 different financial institutions, lenders, banks, community banks, you name it, went away. Many have come back in the past 10 years, many in the form of private equity groups, the raised funds, hard money lenders, you name it. Give me your perspective on the lay of the land right now for the state of lending as really from your standpoint as an institution and a category of business.
The non-government sponsored stuff is going to be incredibly cautious, I think. I know we will be.
Explain non-government sponsored, please.
Well, like the residential lending stuff that, basically you've got lenders putting stuff to the government, to Fannie and Freddie,
right,
in some form or the
so
other.
They're guaranteed to sell their notes. They're not going to carry the notes.
Yeah, they're going to do, they're going to underwrite to the guidelines that they need to underwrite to, and they're going to put as much stuff to those guys as possible. I mean, that's what they do. They play by the rules. They don't get in trouble, and they can lay off the risk, and that's what they're going to do. And so that market is going to, I think, be fairly stable and provide financing for residential housing and apartments. When you get outside of that, then you start to get into the real private lending markets, the commercial stuff that we do, which involves real equity and real money that people are putting up in first loss position if you make a mistake, including the banks. So, I think people are going to be pretty cautious. You talk to people in the lending industry, they're wondering about the stuff we were talking about at the beginning. What's going to happen with office? What's going to happen with hotels? What's going to happen with retail? Or, is this stuff going to come back? And if so, at what level? We've got to get all that sorted out. How much inventory is there out there, given what we think the demand will ultimately be? How much oversupply is there? And again, it's market driven, it's regionally driven, it's market size driven potentially. You've got all of these dynamics that people have to sort out. And I think it's, in the commercial side, it's a buyer beware world. You've got people investing in notes, you've got people investing in bonds, backed by notes. It's up to those people to be very careful and look at what is the underlying assets of bonds, if that's what they're doing, but also the structure of those bonds and where the risk is being laid off or retained by the originators, who has something to gain and who has something to lose. And you got to really understand that if you want to avoid stepping on a landmine like we did in 2008, 2009. And I spent pretty much those 2 years in DC doing stuff and with the government. And that was, this is a little bit controversial in some circles, but if they didn't do what they did then, and I'm not saying they shouldn't have cut it off earlier, you wouldn't know any of all the banks you think of, they'd be gone. They were toast.
Well, you go back through a lot of the books that came out of that period, Too Big to Fail, The Big Short, and the movies and such like that as well. Most people didn't realize that, who was it? Tim Geithner. He stated that people don't realize that we're 10 days away from milk not being on the store shelves.
Yeah, I agree with him. I don't
complete think collapse in the supply chain, complete monetary collapse, no liquidity. You would have swiped ATM cards at your supermarket and it wouldn't have gone through.
Yeah. So if you went back in time to late 2008, early 2009, let me just take one sector, the commercial real estate sector, the one we're lending in right now. When the crisis started back then, the entire value of all the commercial real estate in the U.S. was about $5.5 trillion, something like that. There was about 3 to 3.5 trillion in round numbers of debt on that stuff, right? Mm-hmm. Well, in 2009, that stuff was at least down in value by 50%. Mm-hmm. So what? Okay, so that creates $1 trillion loss in that one tiny sort of sector of the lending world, right? The entire U.S. banking system at that point was capitalized with $1 trillion. That was the true equity capital. Mm-hmm. So you wipe it out in one sector if you don't stabilize that one thing. And that's what those guys were dealing with in the Treasury Department and the Federal Reserve. They were looking at that across every single debt structure we have: autos, residential lending, of course, which most people relate to, commercial lending, the CP market. All of it was in that kind of a state. So they could sit there, and I could too. I was there with them, and you could look at it and go, wow, you guys are going to need to really figure this out and figure it out fast, because mark-to-market accounting, for instance, that's an interesting, you can look at how we dealt with that during the pandemic and how we dealt with it back in that crisis. It took us, I think, I'm going from memory, but it probably took 3 months or 6 months to just decide we're not going to make the banks mark everything to market. Because if we would have done that, they would have all been illiquid. They would have been done.
Yeah.
But they finally made the decision. Whereas, this time it's like, yeah, forget about that. Don't even worry about doing that right now. Let's just get through this, and we'll straighten that out later. So the decision making this time was much quicker, I think, because a lot of the guys that were around in the '08 crisis, '09 crisis, they're like, hey,
yeah, they had a dress rehearsal 10 years ago, right?
Yeah, it's like, hey, we're not going to fiddle around with this stuff. Let's just get this over with. And we may have overreacted this time. I mean, the amount of money that we poured into compared to the TARP and the TALF and all that other stuff we were doing back in those days, that's the chicken feed compared to what they're doing now.
I remember talking with a colleague of mine, and this was when TARP was being debated, and it was more or less being debated on political lines because there was an election happening, right? I mean, September of 2008, we were 6 weeks away from an election, McCain and Obama. And so it was very politicized. But I remember when it was Hank Paulson, he was the Fed Treasury guy under Bush, and they were trying to push TARP through, and Congress turned it down at first. And, Hank Paulson went it literally in on bended knee to Nancy Pelosi, asking her to try to figure out how to pass this thing because of the liquidity crisis that we just mentioned earlier. Yep. And people were arguing about the fact, I forget the number, it was like $753 billion or something in that range.
That's right.
Is that what it was? Okay.
Yep.
So we sat there, and somebody said to me, if you take a $100 bill and start stacking $100 bills, to get to $753 billion, that stack would go 67 miles into the sky.
It's a lot of money.
Now we're talking about $3 trillion, right? Like it's no big deal. And half the politicians want more.
Yep.
I mean, what happens down? What are we looking at here? What's the end game?
Yeah, that's the $1 million question, right?
Trillion.
Yeah, trillions of dollar question. I don't, I really don't know. You get down in the weeds like I am with the PPP, right? So, I'm looking at a very focused problem or an unfairness that happened to these sole proprietors, and talking about giving them $100 billion, right? Like it's a dime on the corner street down there, and I'm like, just put it in. It's it's only a 10% incremental funding to what you've already done with the PPP, and you can get traction with those arguments. And it's a lot of money. $100 billion is a tremendous amount of money, and ultimately somebody's going to pay for it. Mm-hmm. Our argument in representing the sole proprietors is, well, it's strictly a matter of fairness. Who do you want? Who are you going to leave behind? You're going to leave these 20 million sole proprietors behind? You've decided that you've spent so much already on all these other people, but
there's 68% of the employers in this country.
That's my to me, the sole proprietors are they're the backbone of our country.
Right.
I mean, why leave them behind? I mean, I am pretty fiscally conservative. Personally, I'm very conservative, financially. And I wish the government would look at, our whole balance sheet, and, obviously the discussion we had earlier about, what is the real debt? And we need to start facing that as a country. Our leaders need to, understand the components of our real income statement, our real balance sheet, and what that looks like.
You're now raising an issue that I can go and get into the weeds on, but I've got zero faith in our politicians. I think I'm a legal immigrant. I came here as a kid from England, came here at 8 years old. And 12 years later, I became a naturalized citizen, right? To become a naturalized citizen in the United States, I waited in that long line, very happy to do so. I had to take a test, right? I think to become a politician, you need to take a test. You need to understand A, the Constitution, and B, if you've never run a business before, where you've made payroll, where you've dealt with regulations, where you've dealt with tax policy, if you've never done that before, you need to at least pass Econ 101, because some of the policies that these people are making, especially in state governments around the country, certain states especially, is abysmal. It's completely the opposite of what needs to be done if you want to float all boats.
You're 100% right. And unfortunately, a financial literacy class for the government would be a good idea, not just for the elected officials, but for everybody involved. I mean, then
the bureaucrats, all of them.
There'd be some clarity for everybody when they're making decisions. And, as a country, we need to become more informed.
Yeah.
We've
got politicians still arguing Keynesian theory. And, I mean, isn't the discussion over on that? Haven't we looked around the globe for the past 300 years and seen what experiments have worked and which experiments have failed? Yet they're still talking about it as if it's a new idea to me. Meanwhile, we're losing small businesses on a daily basis because they just can't seem to get their act together.
I heard something today that it's 35 or 40% of the small businesses are not going to come out of this. Eventually, that's going to be the mortality rate.
Yeah.
And
of the 30 million businesses, at least 10 to 20 right now are seriously considering either closing the doors, going bankrupt, cutting back in some form. They're not going to be what they were.
Yeah, that's huge. Change. That's not America. You know what I mean?
It's huge. Yeah, that's what we do here. Todd, that we go into small businesses. We restructure their businesses by restructuring their debts. We bring in lenders, good folks like yourselves, to sometimes do discounted payoffs with their lenders. So keeping them out of litigation, keeping both sides floating so that they can continue trading for years to come. But the bottom line is that we keep businesses open. We've seen recessions, we've seen expansions. There's always businesses that need our help, no matter what's going on in the economy. But what we're seeing right now in my almost 30 years of doing this business is unprecedented at a level that when I seriously look at it and I think about it from a macro perspective, it's chilling. I'm scared.
Yeah. Do you think that a continuation for these small, because the average sole proprietor, so the average loan's about 15 and 65% of them get a second loan. So the average sort of sole prop guy is going to get about 30 grand tax free. Do you think that would be meaningful in helping the situation? I mean, I'm talking to people that it sounds like our borrowers certainly think it's meaningful, but I'm not, out consulting with as many small businesses as you are.
I think what I'm hearing right now from clients of ours that have received some PPP is that it's keeping the lights on, right? So it's kind of, for some people, it's kicking the can down the road a little bit, right? We've still got, we've still delayed our rents. We're still behind on our payments. We have to catch up on that in some way. If others, it has been helpful because they may be smaller operators and their cost of doing business isn't very expensive. So now they've got $5,000-$10,000 that they didn't have before. That gives them a little bit more freedom. They can put some of that money now into marketing and trying to get customers back again as well. So from a macro perspective, from, all encompassing, it's hard to say. We go into businesses that are troubled already. So our perspective may be skewed a little bit because we're not talking to healthy businesses. They don't need us, right? So, but the numbers of potential clients is skyrocketed. I mean, it's gone through the roof. It looks like looks like Bitcoin in the past 4 months. Yeah,
it's good for business, right?
It's good, but we have to qualify the businesses. We turn away a lot more clients than we take on, because we serve that sweet spot, the Goldilocks zone, if you will. Obviously, businesses that are doing well don't need our service. Businesses that are too far gone, where they're walking bankruptcies, we can't help them. So there needs to be some assets. There needs to be some AR, some accounts receivable. There has to be some purchase orders. There has to be some assets, either liquid or fixed assets, or commercial real estate, equipment. There needs to be something there. It's not, somebody that's completely gone. So we just have to spend, it's like you guys with underwriting, right? You've got a deluge of clients, and that slowed things down because you've got to go through the process of underwriting. Instead of 10 people, you're now underwriting 100 or 1,000 or whatever the numbers may be. It's similar for us. It's a good problem to have because it means more business, but it does take more time. Yeah.
What do you think with the changes in technology and other things for these small businesses? You brought up the question earlier, which it's hard for me to answer other than from the businesses that we run, competing with these monstrous, publicly traded companies that are so well capitalized.
Mm-hmm.
I mean, you must be consulting with your customers too on how you fight back against that sort of.
Yeah. So the technological aspect of that is really interesting to me. Up until a couple of 3 months ago, I thought the blockchain and the cryptocurrency markets were pure 100% speculation. They were Aladdin Casino in Vegas, and people that I know that were making money on it were just gambling. And I listened to what they had to say. But there is a new technology through blockchain, and some of these companies, they're selling stock through tokens. I don't understand how that's legal from the SEC, and I'm sure there's going to be regulations on it. But essentially, they're selling stock. It's called tokens and coins. In some of these companies that are out there, they're doing DeFi, right? Basically. For insurance, for marketing, for budgeting, for human resources. And this technology is going to and is revolutionizing small to medium-sized businesses from the standpoint of efficiencies, where these businesses are going to be able to use this technology, software programs that are built upon the blockchain. And most people listening to this right now are saying this is, above my head. But think of us right now, in 2021, where were we in 1994 and 1995, right? If somebody came to you and said, hey, Todd, I want you to invest in this company that's listing people's garage sale crap.
Yeah.
You would have been like, what? What are you talking about? Yeah. Invest in this company that sells books. Yeah. Wait a minute. I got Barnes and Noble. Why would I want to go online and buy a book? And how can I trust them? Okay. That's where we are right now. And some of these companies, there's going to be a ton of them that go away, right? They're over speculated. They're nothing. But there's going to be your Amazons. There's going to be your eBays that come out of this. And if you think about it from the standpoint of business efficiencies, just what businesses now use today with tax software and Salesforce and contact management software, things like that. That's the pinprick. And I think over the next 5 to 10 years, and probably a lot sooner than that, I'm somewhat of conservative, but let's say 5 to 10 years, many businesses are going to be able to operate with a fraction of what they spend now on payroll, on regulatory efficiencies, and budgeting as well. And it's all coming out now. The key is to find from a speculative standpoint, if you're looking to gamble on that, there's some companies that you want to check out and learn about that. That's not what I'm here to talk about. But to answer your question directly, if you are a business owner and you've poo-pooed the idea of blockchain and this and that because your nephew made $1 million on Doge or some stupid nonsense, you're missing the boat. This is 1995, 1996 right now. And if you use some of this technology, and if you don't understand it yourself, bring somebody in who does, you are going to maximize your competitive advantage dramatically. Just my opinion, but this is just based upon my learning, especially in the past, several months.
Wow.
Agree, disagree?
I'm kind of one of those old dinosaurs, you know what I mean? Because I'm not very familiar with the blockchain type stuff. But the other things you mentioned, we use heavily. I mean, we invest in, Salesforce, right, accounting software, systems to manage our business planning systems and things so we can keep track of what we're doing at a pretty high level for such small companies that we run. So we feel like we can be competitive with the bigger people because they've sort of burdened themselves with an inefficient infrastructure, so we can move more quickly. We can do things less expensively. We make more money, on a percentage basis if we can control the supply chain and, be competitive. Like in a finance company like ours, our cost of funds is a lot higher than Wells Fargo.
Sure.
But we can compete with them because our cost structure is different. We're faster. We can meet the market faster. If we stay on top of it. And I'm obviously hopeful that, these small business guys, I mean, like I said, I love them. I love making loans to them. I've done it my whole life. And, I want them to survive. But my observation is that the franchise guys who've had the benefit of, a mothership that provides a lot of the shelter, a lot of the technology, a lot of, the stuff that compare McDonald's to a mom and pop restaurant. That McDonald's guy needs to know how to take care of customers and do what he does. He doesn't have to just use the systems they give you that control the supply chain, that control the accounting, that control HR, that they do. Those franchisees can operate at an incredibly high level because the mothership is protecting them. Now, it's not all good, but it's a lot better than, running it out of the back you see to your car without any technology. So
Right.
it's how do we get those services to startup businesses and people that aren't part of a franchise so that they can ultimately rotate from being like me, a guy with a pickup truck and a shovel with a landscaping business when I was 16 to where you have 2,000, 3,000 employees and you have 15 companies. I mean, how do you get from one place to the other? And do it safely, because when we're doing small business lending in the past, it's always they don't have those resources that get them in trouble. They can't see the trouble coming because they're not accounting for it. They don't even know how to keep their books straight on a monthly basis. They never work on their business. I mean, I'm sure those are a lot of the things you provide your customers. Getting a plan, making sure you get your financials in order. You're looking at them on a monthly basis. You're working on the business some part of the time, and you're not just mowing grass all day long and
it's incredible to me, Todd, not to interject, but you just reminded me of something, because, one of the things that we do when we go into businesses is we give them a plan, we give them a structure. Many of our clients, small to medium sized business owners, and I'm sure you see this, you've seen it now for 30 years plus, they're very, very good at one thing, right? Whatever that service or product is that company has made or provides, that's what they know. That's how they've stayed in business and kept the lights on. But many business owners are lousy at a lot of things.
Yep.
And if you don't surround yourself with the right people around you, somebody that can handle your books, somebody that can handle your marketing and your sales force, or whatever it may be, then you're dead in the road, because a great idea is only as good as the execution of that idea, and then the organization to back it up. Are you seeing? You're getting so many applications through PPP, but you guys are doing a lot of commercial real estate lending and, bridge lending and other kinds of lending as well. When you see the stuff come through and people go into underwriting, does it surprise you anymore how disorganized some of your clients may be, or is it just par for the course, or what do you see?
Good question. So in our bridge lending business, we only transact with people that are organized, because the people who try to do bridge lending that don't have experience and they don't have a plan, a serious business plan on how they're going to turn around a piece of commercial real estate, they're not going to make it most of the time. And
by the way, for our viewers, bridge lending is a short-term loan, 6-12 months. You're going to get paid in that period.
Yeah, and we do. That's right. And we do longer stuff because, with some commercial real estate, you could look at a business plan that involves a 24 to 36 month turnaround, or even longer sometimes, if you're really repositioning an asset, where you have to go through and do, a lot of CapEx, on an apartment complex. It may take you 2 to 3 years to work your way through the complex to get it turned around and move rents and do all the things. But if the person comes to us and says, yeah, I bought this thing cheap and I'm just going to fix it up and raise rents, we're like, well, where's your plan? How are you going to do that? What's the phasing structure? How much is it going to cost? Where are your budgets? Let's see, we need all of that. If you're not going to give that to us, we're not going to make you a loan. And I would say, going back to what you were saying earlier about the stuff you guys provide folks in small business, the reason I think I love being with entrepreneurial people, and the smaller the better almost, if you find a successful guy that's got a small company, really doing well, and he's older usually, especially if he's not that smart like me. You had to go to the school of hard knocks for a long time. And, you talk to those guys, they know so much about all kinds of stuff. You can talk to them about marketing, you can talk to them about accounting, you can talk to them about legal, HR, because they had to figure it out or they got slaughtered. Right. You talk to a guy who runs, Wells Fargo or some gigantic company, they're, like you said, they're damn good at managing people or accounting, or they know nothing about the rest of it. Right. But they know how to manage guys and surround themselves with really good guys. And it's a great business model. Works obviously really good for them, but they're not nearly as interesting at a cocktail party as a good old solid, sole proprietor or entrepreneurial guy who's got 10 employees and is dealing with all that shit all day long, every day. Right. he can go terrorize the CEO of Wells Fargo if they want to get down in the gears on most topics. Instead of being, if you got 8 or 10 silos of stuff you got to know in a business, a good, strong entrepreneurial is pretty deep in all 10 silos or he's dead. The guy at Wells Fargo might be good at 1 or 2 of them. The rest he knows nothing, totally shallow.
Yeah.
So, I mean, that's why when we do the stuff we do and, with this PPP, and it's become, very apparent to us that, these guys are really suffering. And we've got to, I don't really like the idea of handing money to the walking dead. There is no real underwriting that we're doing here, on the PPP. It's, you take a line off a tax return, you divide it by 12 and you multiply it by 2.5 and you give them the loan. There's no credit checks. You need to make sure it's the person. You need to make sure they were in business by February 15th of 2020.
Right.
Certain things that we got to check the boxes on. We do that. Yeah. But it isn't our job to underwrite the risk going forward. Our job is to get.
I think in some cases you don't even need tax returns now, do you?
No,
you can look at bank statements.
You don't. Our company, and again, I guess it's just sort of in our DNA. I mean, we do require tax returns in almost every case. Now, the program doesn't require them. You just need, like for sole proprietor, all you need is Schedule C. And it could be a filed or to be filed Schedule C. They can say, well, I think it's going to look like this.
Right.
And that we're supposed to take it. So what we say is, look, what we prefer is a filed 19 tax return. If you want to use 20 information on a to be filed Schedule C because you haven't filed yet, as of Monday, most people will have filed because Monday's tax day, our favorite day of the year for everybody, since it got extended a month. But pretty soon we'll have filed 2020s for most of our borrowers if they want to use them. It just makes us a lot more comfortable, especially the 19. It proves they were in business, which is one of the most important things the lender does in the PPP is make sure that the person was in business prior to February 15th of 2020. So helps us there. It also helps us with the SBA process as we move through the origination and ultimately the forgiveness process. We have that tax return. If there's any issue with the SBA, it makes
Last couple of questions for you, and I greatly appreciate you taking the time today. The next round, if there is going to be a next round, what are you hearing in the weeds right now? Will this still be using February 2020 as the gauge? Is it going to be a later date?
I think you could see a later date. I think you could see them put a later date in for sure because they realized that people were. They're pregnant. They were going to start a business. You don't just like flip a switch and decide. They started it thinking about it in 19, and the wheels were in motion, and they got it going in the middle of the pandemic. I feel sorry for them, but sometimes you got to go, and also there's opportunities in the pandemic. I mean, I'm sure. There's guys that figured out, very legitimate ways to start and grow businesses.
They said the next Amazon was born during the pandemic.
Yeah, probably so. So, those guys, I think they will consider that. I think they're going to narrowly focus, restrict the loan amount. I think they're going to try to level the playing field with the PPP to get to these sole proprietors. I think that's a real issue. Of course, women, minority-owned, veteran-owned businesses are always the focus of the SBA. That's part of their mantra and what they need to do. So that'll be part of it.
And that's by the way, you talk about PPP because you guys provide that, but for business owners, would you recommend that they take a look at some of the other programs that are provided through their states? Because there's $350 billion in tranche that have gone out now to the states with these conditions. What would you suggest there?
The one that's really interesting, and I wish I could get in the middle of it, and maybe there's a way to do it, is the tax credit, employee tax credit stuff. There's so much money out there administered by states and others. I mean, there is a boatload of money.
So for a small business owner or a sole proprietor, what do they need to do on that?
Well, I haven't done it, and we're going to, we've been a little tied up with the PPP. But we've been running my office 7 days a week, pretty much almost 24 hours a day. But we are going to start to look into it because, tax credits for us are money because we make money. So we like tax credits. And so we're going to start to look at how you go and get them. I've heard the process is pretty easy. I've talked to some congressional staffs about it, and they're perplexed why more people aren't going to get those things. And I think it's a matter of, just like with the nice thing that was proven with the PPP is by using lenders. That's how they got it done, because the lenders are out doing business, calling on customers, getting it in. If they paid us to get people to take tax credits, I guarantee you there'd be a lot that tax credit money would get used up because we'd figure it out, we'd put it into a process, we'd automate it, we'd be reaching out to every single person that was eligible, and we'd get it done.
Yeah.
When you do it internally in the government, there's no, as you know, incentive for people no financial incentive to really get after stuff and work 20 hours a day to figure something out and go for it. But I have heard that is one of the most underutilized programs that's out there. There's a restaurant program.
It's massive. The restaurant program is massive.
So you'll love this. They put 28 billion into it.
Yep.
One of our restaurants is eligible for it. So we applied on the second day. We didn't get in time. They're already out of money.
And the second day.
Second day, yeah.
That's incredible. I mean, that sounds like the first round of PPP. That's incredible.
It's exactly like that. So they're going to have to. They're going to either have to just shoot that in the head, or they're going to have to. I think they missed by a 3 to 4 multiple. They're going to have to put another 75 billion in that baby.
Yeah,
and that makes sense when you look at the PPP numbers on restaurants, because
Well, listen, they passed $2.1 trillion and only 350 billion went to small businesses and pandemic-related issues. So there's about 1.7, 1.8 trillion dollars. Something else is out there for something. We don't know what that is, right? So maybe they can, figure that out. I don't want to get political here, but
when I get this tax credit thing figured out, I'll give you a call so you can share it with your customers, because I do think, especially for the ones that are, they're going to make it through this and they're going to make money.
Todd, where can folks find you guys and contact you to help you with their PPP, maybe, the tax credits down the road and other kinds of lending, commercial real estate bridge?
A10capital.com is our website.
A10capital.com.
Yeah. And our PPP stuff is essentially shut down unless we can figure out a way to fund around it. There are some monies with certain financial institutions, so we're looking at potentially partnering with one of them and getting back in the saddle here for a little bit longer to clear our pipeline.
Okay.
If they extend it, obviously we'll be back in business and doing loans for sure. So that's an important thing.
But you guys just aren't doing PPP. You guys are a good resource for commercial real estate, for bridge loans and other such loans, right?
That's our core business, and we're in that business. But the main thing, for me right now is I'm trying to convince the congressional folks to, really take a hard look at this extension. Mm-hmm. And that involves a political outreach. And if people, didn't get in and they think they deserve to be in the PPP and they're a sole proprietor, they really do need to reach out to their senators right now, especially if it's a Republican senator. Mm-hmm. That's critically important. And I know people don't think it makes a difference, but I can promise you it does. So that's important that we, and if you did get the PPP and it helped you, still reach out to your senator and say, you know what, you need to extend this for these little guys, pay it forward a little bit. Yeah. I mean, these guys they're on vapors. And so, that's where we're pretty focused, here until they shoot it all the way in the head. We're going to fight for this, what I consider to be relatively small extension and run. I'm not a politician and I'm not used to running a political operation, but that's kind of what we're doing here for the next couple of weeks. Yeah,
it's required, and it's good folks like you that are helping small businesses nationwide. This is what we live and we breathe, Todd. I mean, I'm a small business advocate, and so we're in unprecedented times right now. There's a lot of pain, a lot of heartache out there. But we will come out of this. Everything ebbs and flows in life. And, many people will come out of this stronger as well. And many cases, maybe they'll be a little bit more organized as well next time. Right.
That's obviously the entrepreneur in you coming out. If you weren't an optimistic person, you wouldn't be anywhere near doing what you're doing.
Lemonade out of lemons. It's the only way to be.
That's what we say around here. I mean, the pandemic hit, we're like, hey, we got to figure out what the hell we're going to do and keep going. And that's what's great about America. And we need to keep that going, in my opinion. And, people like you, your voice is incredibly important. I thank you for, helping the small business guys out. And, the politicians will listen to you, big time, people that represent others and work with others. I mean, your voice is very important, in the fight. So
I appreciate that. And likewise to you as well, Todd. Todd Lindsey, Co-founder and COO at A10 Capital. Everybody go check out their website. It's online. You can make applications through the website. Give those good folks a phone call. They are nationwide, correct? You guys are lending. Are you in all 50 states?
All 50 states. Yeah.
All 50 states, no matter where you're hearing this. Thank you so much for taking the time. Greatly appreciate it. We'll have to have you back on down the road, get some updates.
Anytime. If I figure that tax credit thing out, I'll call you.
Absolutely. Thanks, Todd.
Thanks.
Cheers. And thank you for watching as well. Greatly appreciate it. A couple of things. If you are running a business right now and are seeking some solutions to some of the problems that exist, and there are many right now, check us out. Come to valcorworldwide.com, fill out the form, the contact information at valcorworldwide.com, and one of our senior advisors will contact you. And everything we talk about is confidential. And if there is no success in helping you with your business, there is never, ever a fee. Prevent litigation, prevent bankruptcy, stay in business, keep your employees employed, and take the worry and the stress off. This is what we've been doing now since 1994. And if you'd like to provide our service, we have a very systematized approach to helping small businesses. If you are thinking about running your own executive level financial consultancy firm, providing both business restructuring and capital acquisition. Yes, we do provide lending resources to our clients. This is a very important area for us. We're not competing against the thousands of loan brokers that exist out there. There are many, and unfortunately, they're being churned out by the dozens and dozens and dozens every month all across the country, competing against each other. And quite frankly, the institutional guys, the folks like Todd and his firm, are usually going to get that kind of business. And so, you know, the thing is that we do provide access to folks like Todd and other great companies. They are partners with us. We have over 300 categorized lenders that we work directly with. And if you are looking to provide that as a service in adjunct to being a business restructuring consultant, a small business advocate like us here at Valcor, let us know. Go to valcorworldwide.com. You will find that there is some information available that you can learn how to become a consultant. Send us your information. Again, one of our senior advisors will contact you. We have an online private portal that will guide you through that process and let you know exactly whether or not it's a good fit for both you and us. In the meantime, hang in there, folks. The economy, it will ebb and it will flow. So just stay informed, know what's going on, and we look forward to speaking with you again. Thanks for your time.